Number 4, the conceptual framework identifies each of the following uh, as an underlying assumption. So underlying assumption is going concern. Okay, that will be the answer. Fifth one is asking about which one of the following is not an enhancing uh, qualitative characteristic. So it is asking about not an enhancing qualitative characteristics. Hmm. Which one of the following is not? That's interesting. Uh, Consistency here is not an enhancing. It is part of the qualitative characteristics. It is an important part of the qualitative characteristics. Hmm? I mean, comparability of financial statements is added by the consistency of policies and methods used. Hmm? So consistency is an important part, not an enhancing. Okay. So consistency is an important part, not just an enhancing one. Okay. So this consistency will be the answer. Consistency. Okay. Which two of the following are purposes of the conceptual framework? So two purposes we need to tell. First one says assist preparers to develop consistent accounting policies when no standard applies to a particular event. So that this appears to be one of the right ones, that the conceptual framework helps preparers to develop consistent accounting policies. Second one says to issue rules regarding the accounting treatment of elements in the financial statements. Uh, it is not. To issuing rules is not the purpose of conceptual framework. It is definitely not. To assist in determining the treatment of items not covered by an IFR, that's right. If there is certain item for that, there is no specific treatment mentioned in any of the IFRSs. Uh, we follow the conceptual framework to determine its treatment. So that's definitely one of the second answer. And to be authoritative, no, conceptual framework is not authoritative. It's rather a guidance. So this is also not the right one. So A and C, so first and third one will be the right ones. Seventh is talking about when will you recognize an asset. So if you have a secret formula, which is like it's an intangible. They have this secret formula for the manufacture of best-selling sauce, secret, and the recipe is kept secure at the company premises and known only by the company. It is not talking about it whether it was acquired or it was internally developed or anything. So it is an intangible which should be recognized as an asset. Okay, it is an intangible asset and should be recognized as an asset. Okay. Second one is they have a highly lucrative contract signed, which is due to come in shortly. So still they don't have control. It doesn't qualify the definition of an asset. So it is not. Uh, Third one is the items are to be sold by a third party, but which can no longer, which the company can no longer control. So the company has lost the control, so it is also not your asset. And a receivable from a customer which has been sold to a finance factored to a finance company with full recourse. Okay, so because it has full recourse, it will still be treated as an asset. So first and fourth will be the answer. So C should be the answer, first and fourth.